May I have your attention, please? This session 1 will start shortly, so please make your way to the venue and be seated. We don't have any fixed seats for the afternoon sessions, so choose your selection that you prefer and get ready for the session to begin. And we'd like to ask all of you to keep wearing your masks throughout the sessions for the quarantine and safety instructions, and a simultaneous interpretation will also be provided during the session 1 and 2. Tune the channel at 1 for Korean and 2 for English. So please be seated and please make sure your phone is on the silent mode. Thank you. May I have your attention? The afternoon session, the first session will start soon. Please make your way to the venue and be seated. And please make sure that you wear your masks throughout the sessions, and simultaneous interpretation service will be provided throughout the sessions. So if you need a translation service, use the receiver you find at your table and tune the channel at 1 for Korean and 2 for English.
Throughout all sessions. The receivers will be found at your table, and please tune to channel 1 is for Korean and channel 2 for English. 네, 수신기가 없는 분들께서는
If you can't find any translation devices, you can find the information desk at the entrance of the venue. And also remember that we don't have any designated seats. We're not running any fixed seats, so please make sure to fill up the first rows first. And we appreciate your cooperation. Thank you. Welcome to the afternoon session, the session 1 and 2 of the 2022 IIOF. It's good to see you again, and welcome everyone. The first session is maritime logistics, and the topic of the session is changes in the global trade environment and the future of the maritime and port industry. The moderator will be Professor Kwon Pyong-oh, Chair Professor of Korea Maritime Ocean University. So let us invite the moderator with a big round of applause. Good afternoon. Thank you for the introduction. I'm Professor Kwon Pyong-oh, and I welcome you all to this session 1. And I'm wearing a blue tie because it's the Ocean Forum. So, do I look cool? Thank you. So, do you remember when the COVID-19 hit the whole humanity in 2020? And the trading companies and the shipping liners and logistics companies faced huge sufferings in their management and operation. I remember this because I was the CEO of the Cotra, and the export companies had to face huge challenges because of the shutdowns and the lack of transportation. They were not able to participate overseas exhibition or face-to-face marketing events, and the cargoes couldn't be transported on time. And as this graph shows, the trade volume in 2020 decreased by over 5% compared to the previous year. And such decrease in trade volume led to a shrinkage in throughput. Container cargo stayed at the same level compared to this last year, and dry cargo decreased by 1.1%. And as you assumed, naturally, the freight was also negatively impacted by the COVID situation. And I know all of you are familiar with this situation. And in 2021, last year, the world economy recovered, and the crisis of the opposite nature occurred. The maritime throughput increased by 4 to 6%, but freight also increased by 2.7 times for dry cargoes and 2.9 times for container ships. And in the second half of last year, all the U.S. ports suffered congestion, creating a record disturbance in logistics. And a new term, containergeddon, from Armageddon, was born, which is not funny at all, of course. All the trading companies couldn't get ships and containers, and they had to pay for the record high freight, of course. But what matters more is the future. This year was a tough year, but next year will be a tougher year. This was a remark by the managing director, Kristalina Georgieva of the IMF. And we see this every day in newspaper and media. The inflation rate is a record high in decades, and countries around the world are increasing base rates. Russia invaded Ukraine, and global logistics disruption is happening all around the world. And this was briefly mentioned in the morning session. The world economy and trade has been facing perfect storm situation. And as you can see from this graph, the basis of the maritime logistics or maritime industry is throughput, which is closely related to the global trade volume. And as the quote by the managing director of the IMF, the global economic forecasters are expecting that the growth rate will stay only at 3% level compared to 5.8% last year. This will translate into the same crisis, the same challenges in the past. So, in keeping track of the current situation, the first session, as was mentioned by Ms. Kim, the topic of the first session is the changes in the global trade environment and the future of the maritime and port industry. Each presenter will be given 15 minutes for their topic presentation, and then we'll invite all the speakers to the stage to have 20 minutes of discussions, including the Q&A, to talk about some factors that will have a significant impact on the future of our industry. And if we have some spare time, we will open the floor to the audience of this forum joining us here on site. for further Q&A session. And please understand that Professor Green from the US couldn't be here with us because of the time difference. So he sent his video for his presentation and the Q&A session. But we will have Dr. Kwiatkowski from Poland will be here with us, joining us through online despite the early morning hours in Poland. Thank you very much. And then again to the host for the introduction of the speakers. I'll see you again in the discussion session. I look forward to your continued support throughout the session. Thank you. Yes, thank you very much, Professor Kwon. He's the professor of the Korean Maritime and Ocean University and the moderator of this session 1 in this afternoon. He was kind enough to give us the instructions and guidelines for how this session will unfold. Thank you very much, and I think we are honored by his presence. So let me give you the first speaker of the session 1, Professor Jakub Mikhail Kwiatkowski, a senior economist, and his topic is Global Trade Monitor, what will determine global trade forthcoming months. He's waiting through Zoom.
Dr. Jakub Mikhail Kwiatkowski, hello.
Hello, good morning.
Thank you very much for coming. Yes, please.
Thank you. Once again, good afternoon. My name is Jakub Kwiatkowski. I'm a senior economist at the GTS forecasting team at S&P Global. First of all, I would like to thank the organizers for this incredible opportunity to attend the forum. I'm sending greetings to all participants of the forum from a beautiful port city, Gdansk, Poland, where my part of the global forecasting team is located. In the next few minutes, I will have the pleasure to share the S&P Global Trade Analytics Suite, most recent data on international trade and the prospects for the forthcoming months. Next slide, please. Let's get into the plan of today's presentation. I'll start by analyzing recent data on global trade in the last few quarters. Secondly, we'll focus on main factors driving the trade forecast for 2022 and 2023. Next, I'll move to discuss the macroeconomic environment of the global economy, after which I'll present our newest trade projections. And finally, I'll try to discuss some trends starting recently that we should monitor in the long term. Next slide, please. If we consider the top 10 economies in the world, which are responsible for more or less 80% of world GDP, or 75% of global exports, we can see that the growth rates related to post-2020 recovery peaked in Q2 2021 and then moderated to lower levels in Q3 and further in Q4 2021. The slowdown is sustained in Q1 2022, and taking into account the newest macroeconomic projections, it is expected to continue in the following quarters with potential contraction later this year in some of the economies. If we aggregate the data to yearly in 2021, we can see that export increased the fastest in India, followed by Russia, both more or less 40%, and Brazil, 34%. For mainland China and Canada, the growth was about 30%. The growth for South Korea was 25%, while for remaining economies within this top 10 group, the growth rates circulated at about 20%. The situation started changing in March 2022, when the export growth dynamics slowed down in 8 of 10 economies, while in the UK, the trade drop was achieved by more or less 6%. At the same time, Russia stopped publishing the data from February onwards, yet a tremendous drop is obvious as a consequence of aggression in Ukraine. In April, the dynamics of exports increased in 4 countries, with the highest growth in India and Canada, while negative growth rate year to year was achieved by the European Union and Japan. Next slide, please. When analyzing and forecasting international trade, we do not only rely on numbers, but also take into account qualitative data. We assess the impact of the socio-economic and geopolitical events. Four that I find the most important, and I would like to elaborate a bit more how they impact international trade, are COVID-19 pandemics, war in Ukraine, inflation, and the risk of recession in the global economy. Next slide, please. So first of all, pandemics. Since the beginning of 2020, COVID-19 is a game changer also in terms of international trade, resulting in the largest trade drop since the global financial crisis from 2007-2009. Now we observe another spike in COVID new cases, which is approximately 1.2 million new cases daily in the world, which is the value similar to the results from March this year. In general, every next wave have a lesser direct impact on trade, but indirectly significantly affecting it through the global value chain disruptions. The issue with estimating the impact of global value chain disruption is that it significantly differs regionally. A good example can be the Omicron variant, which did not impact to a large extent European economies compared to East Asia. Such variation makes it way more difficult to predict the end of global value chain disruptions. For now, we expect the situation with global value chains to settle down in the second half of 2022 and 2023. Next slide, please. Next slide, please. I still see the slide with COVID-19, and I'm not sure if there's something wrong with the presentation or there's something on my side.
I think it's a problem of your side because we're seeing the right slides. The slides are clicking through, but I'm not sure. Is your screen frozen or? Because we're seeing slides, war in Ukraine and inflation, and so your slides don't click through?
Another slide once again, please. Okay, I think I'll just start discussing other factors, and then maybe the presentation will follow up. The second factor I wanted to discuss is the war in Ukraine. The impact of war on trade is really interesting, basically, because for the first time ever, we observed such complex responses from the developed countries, ranging from embargoes to FDI withdrawal and consumer boycotts. All of those sanctions impact the trade between Russia and Ukraine. But in fact, from a global perspective, its impact on world trade is not that large. In line with our data, Russia is 12th exporter and 21st importer, while Ukraine is 45th and 48th exporter and importer, respectively, in the world. Actually, the most significant impact of war on the world trade is caused at the sectoral level through commodity prices. The largest shocks we see are related to sectors where Russia and Ukraine are major exporters, primarily agriculture goods, energy resources, or fertilizers. All those together are expected to, in our forecast, to decrease the global trade in 2022 by more or less 1 percentage point. Next factor I want to discuss is inflation, and numerous factors, also the ones I already described, contribute to inflationary pressure in the world. For another month in a row, the forecasts of inflation by the S&P show an upward revision of inflation in the short term. According to the newest data on inflation, inflation in the world will reach its peak in Q3 at level of 7.3%, and the decay of inflationary pressure is expected to start in Q1 2023 and to return to the long-term trend in Q4 2023. At the same time, the inflation in emerging markets exceeded the inflation in advanced economy in Q2 2022, after the switch off that took more or less 2 quarters. Due to the lagging of inflation dynamics of emerging economies, the slowdown of inflation is expected there a quarter later than the one in the rest of the world, which is Q2 2023. Now the recession. The recent macroeconomic indicators and downgrading forecasts in the last weeks indicate a severe macroeconomic slowdown with the potential for a recession in the forthcoming months. From the international trade perspective, trade is expected to be affected from both the import and export side, additionally delaying global trade recovery. On the import side, the trade will be impacted primarily by lower domestic demand in the majority of economies, fueled by high inflation. On the export side, lower intensity of trade will be driven by slowing down manufacturing sector production caused by ongoing global value chain disruptions, among others. Despite a visible slowdown in the recent monthly data, global trade is still, at this point, far from being negative. I will try to show a bit later how it will impact our projections. Previous slide, please, because I can see my presentation again. Can we go back a bit in the presentation? One more, please. Cool, thank you. So clearly, all those factors I mentioned can be considered as the most important ones lately. However, it's obvious that there are many more events that can impact trade, both directly or indirectly. To mention just some of them that we are constantly monitoring, there are trade tensions between mainland China and the US. There are new regional trade agreements. The newest one is probably Croatia joining the Eurozone in 2023. We also follow vivid changes in energetic policy in Europe and changes in the forex market. As you know, dollar and euro basically approached parity. One more thing I would like to add here is how dynamic the socio-economic and geopolitical environment is recently. I was asked to prepare the presentation 2 weeks ago, and the list of such factors would be probably a bit different today, or at least longer, as we have recently significant political changes in the UK or Sri Lanka. Next slide, please. From a purely trade perspective, the global situation is reflected by Purchasing Manager Index, PMI, for new export orders. For global manufacturing, in May, another month in a row fell below the benchmark of 50 points and equal 47.9, showing some symptoms of the slowdown in the global economy. The readout for May was the lowest since the first wave of COVID-19 pandemic in early 2020. On the other hand, the results for global services exceeded 50 points in the 7th time in a row, indicating resilience to the condition of the global economy. The readout for May equaled 50.9 points. At the country level, for our top 10 economies, the values of PMI new export orders exceeded the benchmark of 50 points only in 3 analyzed economies: India, the US, and Canada. In absolute terms, the largest month-to-month increase was observed in India, which obtained the highest PMI new export orders value since April 2011. Similar to previous month, the lowest value of PMI among the analyzed countries was achieved by Russia. The readout for May equaled 35.4. On the other hand, the highest drop in absolute terms was obtained by the US, which may be another premise of global slowdown. Next slide, please. Now, how GDP projections will look like. I talked a bit about recession, now to be more specific. The global economic climate shifted in June, basically, putting forecasters on recession watch. The main factors are basically the ones I described already: peaking inflation and interest rate in many economies, slowing down domestic demand, affecting crucial industries, war in Ukraine, and remaining global value chain disruptions. All these caused the S&P to expect global GDP growth to slow from 5.8% in 2021 to 2.9% in 2022 and 2023. Similarly, the PMI main engine of growth is the services sector, which is so far robust to the global situation. Next slide, please. In our international trade forecast, we utilize crude oil and natural gas prices as a proxy for transport cost. Just over the last year, the price of oil increased by more or less 70%, which contribute to high inflation worldwide. And together with exchange rate volatility, rises overall trade uncertainty. Since the peak in the first half of March, the price initially decreased in April, then price gradually increased to exceed the level of $120 and at the end of May, and to drop below $100 in mid-July. Similar to the price of oil, the price of natural gas increased significantly over just last year, reaching maximum value of $9.3 in the end of May, with an increase year to year of 300%. Both indicate significant increase in the trade cost worldwide. Next slide, please. Now, how all these factors sum up to the global trade forecast. In 2021, in line with our global trade analytics suite forecasting model results, global trade will increase by 12.5% in the case of real value, while the volume grew by 7.9% year to year in 2021. In 2022, the real value growth rate is expected to slow down to 0.3%. At the same time, the volume growth will decline by 0.2%. The moderation in 2022 is anticipated to be followed by an acceleration of 2.7 and 2.1% respectively, which is a return to the long-term trend. Next slide, please. If we transform this data into growth rates, the picture shows some historical similarities to the previous crisis in 2009. Compared to that time, trade contraction was less significant in 2020. However, the increase in 2021 was about the same as in 2010. And finally, similar to the post-crisis period, in the long run, the return to stable path growth is expected. To be precise, over the period 2022-2035, compound annual growth rate is expected to amount 2.4% for value and 2.3% for volume. Next slide, please. I have a feeling that our projections sound quite pessimistic so far, but now a bit of optimism. From the longer perspective, the post-2020 recovery was strong enough to allow global trade to reach its pre-pandemic levels already in 2021, and presently predicted compound annual growth rate is strong enough for global trade to achieve a higher trajectory than the pre-pandemic trend presented with a dotted line in the slide. Even taking into account the negative revision from our previous forecast related to the recent macroeconomic situation. All in all, in 2035, the value of global trade should exceed the value from 2019 by 46%. Next slide, please. Next slide, please. So I think there's something on the presentation again. I know that I'm running out of time, so just quickly, I wanted to show a quarterly perspective of our forecast, where the recent slowdown of the global economy is reflected. It's one slide back, please. Can we go to the previous slide? Now, next slide. There was one in between. Okay, so anyway, I just wanted to show that that all the values, even we have the V-shaped, classical V-shaped pattern with the strongest decline in Q2 2020, it's essential to note that all the values projected for 2022 and 2023 in terms of level and trends are higher than the observed ones before the pandemics. Next slide, please. Next slide, please. So all of these discussed factors and numbers shape the global trade in the short and medium term. But in our analytics, we also carefully monitor the long-term trends in global trade. The overall impact of war will obviously depend on the duration of sanctions imposed by developed countries. But on the other hand, we try to anticipate changes that can remain in the world economy for the longer term. I'm talking primarily about major trade shifts. What we can already see in the data, there are spikes in Russian exports to oil and to China and India of commodities which are not imported by developed countries anymore due to sanctions. We believe that the overall change for Russia will be negative, as not all exports will be absorbed regionally. At the same time, these changes may stay for longer and result in, from economic perspective, in the shift of Russia towards its Asian partners. At the same time, Europe needs new suppliers of gas and oil. It's still unclear how it will end. Russian resources may be replaced by existing regional suppliers such as Norway or Algeria, as well as remaining world's largest exporters of gas and oil, US, Qatar, or Australia. And finally, with some probability, reshaping of European Union energetic safety may create the chance for new natural resource exporters, maybe from emerging markets, maybe in Nigeria or other countries from emerging markets group. Next, future of globalization. COVID-19 pandemics revealed the fragility of global value chains, raising many concerns about the future of globalization. It seems that the era of hyperglobalization comes to an end, but how international trade relations will evolve is highly uncertain at this point. I can personally think of three scenarios. First of all, remaining on the recent level of globalization, it's still possible, as we can see, quite a strong recovery of both trade and FDI in 2021. Second, deglobalization and large-scale reshoring, which is often discussed as a consequence of raising protectionism, also automation of production. It is, however, way too early to see it in the data. It's rather a long-term trend at the global level. And finally, the last option is a regionalization of the world economy into several blocks gathered around regional leaders, the US, China, maybe European Union as well. But all these are rather long-term structural changes rather than immediate adjustments to the global division of labor. Next slide, please. That's basically the end of my presentation. So I'd like to thank you very much for listening. Once again, I would like to thank the organizers for having me here. If you have any questions or if you're interested in S&P Global Trade Analytics, youth data or analysis, please contact me or our product manager directly. The emails are presented on the slide right now. Thank you very much.
Thank you very much for your wonderful presentation. 네, 발표 잘 들었습니다.
Thank you so much. We'll invite him again for the discussion session. There's a delay in the internet connection, so please understand the delay and technical glitch. Thank you.
Now we will invite the second presenter. The second presenter is Professor Barry Eichengreen, professor at UC Berkeley. He will talk about the globalization, global value chains, and friend sourcing, how they will impact the Korean economy. As mentioned earlier, due to time differences, Professor Eichengreen couldn't make it here today, so we will meet him through the screen.
Ladies and gentlemen, good morning. I'm Barry Eichengreen. I'm happy to have this opportunity to speak to the Incheon International Ocean Forum on globalization, global value chains, and friend sourcing, topics that are relevant to everyone involved in shipping, logistics, and finance. The next slide shows the agenda for today, my agenda for today. I'm going to ask about the future of globalization. I will ask whether global value chains will survive COVID and the new Cold War, if you will, between the West and conceivably Russia, China axis. I will ask whether there will be friendshoring, with what implications. I will review what's happening to the global financial landscape, and I will conclude by asking how that landscape will change as a result of the Russia sanctions. The next slide here shows you that there is, in fact, little evidence to date of actual deglobalization of trade. The figure on the right shows you global trade as a share of global GDP. And you can see that while this ratio has leveled off, it hasn't really fallen. Trade is still growing as fast as GDP globally. All that has changed is that trade is no longer growing faster than GDP. So Professor Danny Roderick at Harvard talks about hyper-globalization in the period from the 1980s through the global financial crisis of 2008. It does look like that period is over, but it does not look like trade is falling relative to GDP. The next slide is a reminder that there have been subtler changes. Global value chains have changed. They are being reconfigured, and you can see that in the figure on the far right here in the circled portion in particular, that the fragmentation of production, measured by the import intensity of production, essentially leveled off already 15 years ago, around the time of the global financial crisis. And it's predictable that now, after COVID, supply chains are going to be reorganized more on a just-in-case as opposed to a just-in-time basis. In other words, they will be shortened, they will be regionalized, more redundancy will be built in. But saying that global supply chains will be reorganized is a very different statement from saying that they will now go away. In the next slide, I point to the question of whether the existing US-China relationship will persist. Many people are pessimistic about this. US President Biden has given no indication that he will eliminate Trump's tariffs on US imports from China. The United States now prohibits sales to China of high-tech gear, potentially useful for surveillance. It's placed a number of Chinese firms on a blacklist, denying them US investment. All this might seem encouraging, but it's important to remember that China remains America's third most important export market, after only Canada and Mexico, and that the US remains China's first or second most important export market. It's neck and neck with the EU, depending on the quarter you look at and the dollar-euro exchange rate at the time. I remind us in the next slide that geopolitics, global geopolitics, could change this. We could conceivably see the United States impose secondary sanctions on China if China is seen as too overtly aiding Russia, something that China has clearly avoided doing so far. Moreover, US-China trade could be severely disrupted by a conflict over Taiwan. Here, I'm not making a forecast. I'm an economist, not a geopolitical strategist, but I do worry that bilateral trade relations between the US and China could collapse as a result of such a conflict. Trade would be regionalized into two blocks, and that would make life very difficult for the shrimp swimming between the two whales for South Korea attempting to navigate between China and the United States. Turning in the next slide to the financial side, what are the implications of all this for the dollar? Is the US dollar becoming less dominant as a global currency? So far, not obviously. The dollar's share in global trade invoicing, international debt, cross-border non-bank borrowing still far exceeds the share of the United States in actual trade, actual bond issuance, actual cross-border borrowing and lending. The dollar's dominance has been resilient in the face of a declining US share of global GDP. Dollar dominance survived the collapse of the Bretton Woods system, and it survived the global financial crisis as well. As the next headline tells you, however, dominance is not necessarily forever. With the rise of the euro and the Chinese renminbi, many people argue this situation may now be poised to change. Starting in 2012 with ECB President Mario Draghi's "do whatever it takes" pledge, the European Central Bank indicated that it was ready to act as a liquidity provider of last resort to investors in euro-denominated assets. In 2020, the European Union created a 850 billion euro recovery fund of AAA-rated government bonds for central bankers and corporate treasurers around the world to invest in. China, meanwhile, has been taking a variety of initiatives designed to internationalize its currency, now extending to the creation of a digital renminbi, or ECNY. So the view is that the euro and the renminbi are poised to challenge, dethrone the dollar. I now want to challenge that view a little bit and provide you a different perspective. I'm going to look primarily at the currency composition of foreign exchange reserves including looking at data for the beginning of 2022 that the International Monetary Fund just released last week. On this dimension, the dollar has not become more dominant. It has lost dominance over time. So you can see two measures of the dollar's share of global foreign exchange reserves in red and in blue in the figure on the right. And you can see that the dollar has lost global market share since the turn of the century. Its share of global reserves has declined from 71% to something on the order of only 59% now. So that's consistent with the conventional wisdom. However, and that's consistent with what I wrote in this book, Exorbitant Privilege, about the dollar's privilege as the dominant international currency a decade ago. But it's not consistent with what I show you in this slide, that what we've seen is not, in fact, a shift toward the euro and the renminbi, the pound sterling, the Japanese yen, the traditional reserve currencies. Instead, what we've seen is the rise of non-traditional reserve currencies. That's a shift a quarter into the renminbi, but 3/4 into the currencies of smaller economies, the Canadian dollar, the Australian dollar, the Swedish krona, and importantly, the South Korean won. That shift by central banks is broad-based. So we can see in the data 46 active diversifiers who've moved their reserves in this direction. And in explaining that shift in this next slide, I would point to three factors. Number one, improvements in the technology used to trade these currencies. Number two, the fact that central bank reserve managers have larger portfolios that they want to invest and earn returns, so they are chasing returns. And third, the fact that returns yields on traditional reserve currencies have been low, 0 or even negative interest rates on the dollar, the yen, and the euro. So where are central bank reserve managers going? This next slide answers that question. They have been going primarily into Australian dollars, Canadian dollars, Swiss francs, and to an extent, Korean won as well. And New Zealand dollars, Hong Kong dollars, Norwegian krona, Danish krona. These are the currencies of solid economies, but they have smaller financial markets, and those small financial markets are no longer a deterrence to international reserve managers given modern financial technology. Which countries and central banks are actively diversifying? The answer is it's a very diverse and eclectic group, and I show you who these central banks are, which ones have moved a significant share of their reserves into non-traditional currencies, and others have moved a smaller but still significant share. And lo and behold, there is the Bank of Korea, once again, on the list, which has moved on the order of 6% of its reserve portfolio into non-traditional reserve currencies. Again, I think this diversification, as I show you in this next slide, is driven in part by market liquidity and returns. One indication that the market in these smaller reserve currencies is now liquid and efficient is that bid-ask spreads on those currencies are no longer uniformly higher than for the big traditional reserve currencies. This next slide shows you that turnover, actual trading in these non-traditional reserve currencies has increased as well, most notably for the Australian dollar, but also for the Canadian dollar, the Swiss franc, the Swedish krona. This next slide is an illustration of the fact that returns on these non-traditional reserve currencies are attractive. The Sharpe ratio, Sharpe with an E, on these currencies is the return adjusted for the risk, or the return normalized by the volatility of these exchange rates. And you can see that the return adjusted for volatility is attractive for the Australian dollar, the Canadian dollar, the Chinese renminbi, more attractive than the euro, the Japanese yen, or the British pound. And the fact that the Sharpe ratio for the Chinese renminbi is so attractive reflects the fact that interest rates there are positive and the currency is managed such that it is very stable against the dollar. Why hasn't the euro attracted more attention and investor interest? Because there is a shortage of AAA rated government securities to be held as reserves by corporate treasurers and central bank reserve managers. European corporations borrow from banks. They don't issue bonds. Only a small handful, 4 last time I looked, European governments are AAA rated. Most of their securities have been bought by the European Central Bank or have to be held by European commercial banks as reserves. Why not the Chinese renminbi to a greater extent? China still lacks the financial infrastructure. It has a cross-border interbank payments system, CIPS, that is supposed to operate like the New York clearinghouse, CHIPS, where CIPS clears renminbi payments, CHIPS clears dollar payments between banks. But CHIPS is still 50 times as large by value of payments as its Chinese equivalent. Chinese capital controls remain, and they're a deterrent to investing in the renminbi. And the fact that China is an autocracy without checks and balances is important. Show you here a picture of Venice, whose currency was the dominant international currency back in the 14th century. Venice was a political republic with checks and balances on the executive. Every leading international reserve currency in history has been the currency of a political democracy or republic. Who holds the renminbi? You can find those data on the IMF's website if you look carefully. The answer is heavily Russia for obvious geopolitical reasons, sanction evading, but also a variety of other countries, interestingly, including the likes of Brazil. Finally, and I will conclude with this, to head off the inevitable question, might the fact that the dollar still remains important be changed by US sanctions, freezing the reserves of the Bank of Russia? I've looked at past sanctions and they don't appear to have affected reserve currency portfolio choices. Conceivably, current and future sanctions could be different, but where is the Bank of Russia or other central banks contemplating the possibility that they might become the target of US sanctions? Where can they go? They can't go to the Euro area or the UK or Japan or Australia or Canada or Sweden because they are all on board with US sanctions. What about the renminbi? Won't the response to Russia's invasion of Ukraine prompt movement in that direction? I think the answer is not clear. China has hesitated to be a sanction buster because of fear of secondary sanctions. Will it allow Russia to freely access its renminbi reserves? We will see. So to conclude, the dollar's dominance is eroding slowly, which is what one should expect in an increasingly multipolar world. But this has not been predominantly movement into euros and the renminbi. Those currencies both have limitations. Rather, it has been movement into other non-traditional subsidiary reserve currencies, including, lo and behold, the Korean won. That reflects technological and financial innovation, more active reserve management, low interest rates on traditional reserve currencies. So I conclude that if this continues, the dollar will be felled not by another giant, but conceivably by a swarm of midgets. My broader conclusion is that globalization as we know it is changing, but it will not go away. So I thank you very much for your attention.
네, 박수 부탁드립니다.
Thank you very much for your presentation. That was the presentation by Professor Barry Eichengreen. This is session 1, Marine Logistics, Changes in the Global Trade Order and the Marine Logistics Business. The next presenter is joined by Ninan Biju Umen from Singapore. He will talk about the Container Port Performance Index 2021. Let's welcome him onto the stage. Let's welcome him with a big, big hand.
Good afternoon, ladies and gentlemen. First of all, let me extend my thanks to the Ministry of Oceans and Fisheries and Incheon Metropolitan City for inviting us to the International Ocean Forum. It's my pleasure to join the discussion on how maritime logistics infrastructure and services could be planned and efficiently developed or adapted to support the demands of the changing patterns of the global trade. It is interesting to hear the previous speakers who outlined very correctly the challenges and the shocks that are plague in this global scenario. So what I would be talking about is how do we respond to those challenges? And how, as a maritime city or maritime nation, the government of Korea and the leading maritime nations could respond to the challenges. Looking specifically into the maritime logistics sector, we realized that one of the most immediate response that maritime nations can make is in the area of efficiency. If you look into the current scenarios, I think you may have read about the long delays in the ports around the world. So this was a very important topic that needs to be addressed so that the leading maritime nations is able to respond to the changing nature of the global trade. So my presentation today is focused on enhancing port efficiency. And I wish to present the Container Port Performance Index, otherwise we call it CPPI, which has been jointly produced by the Transport Global Practice of the World Bank in collaboration with the Maritime Trade and Supply Chain Division of S&P Global Market Intelligence. There are 4 main parts to the presentation. Starting with the background and the importance of such a study, the data used and the methodology, and about the index. Now, ports are the primary nodes in the maritime logistics system. And maritime transport covers over 80% of the global merchandise trade by volume. And any impediment or friction at the port will have tangible repercussions for their respective hinterlands and the population. The COVID-19 pandemic and the blocking of the Suez Canal by container ship that ran aground, disruptions at the Yantian port had devastating impacts on the global economy last year. The most visible indications of stress in the system are the shortages of certain products, the ships waiting at anchorage outside major ports, and the impact on the cost of goods. These challenges continue to underline the critical role of ports and the associated logistics chain in the global economy. I mean, I'm skipping the part on world economy because the previous speakers have really listed out the challenges. But in short, the world economy continues to suffer from a series of destabilizing shocks. After more than 2 years of the pandemic, we now have the Russia invasion of the Ukraine and its global effects on commodity markets, supply chains, inflation, and financial conditions have steepened the slowdown in global growth. The World Bank, as Mr. Kwan has presented, the World Bank's latest forecast, published last month in June, downgraded the economic outlook, with the global growth expected to slow sharply to 2.9% from 5.9%, which was earlier forecast, and average at about 3% in the 2023 to 24 period. Although some of these adverse impacts could be mitigated by new trade linkages, a more protracted war and its long-lasting repercussions, such as persistent uncertainty, represent a substantial downside risk to the long-term trade outlook, and it could lead to fragmentation in the global trade system. Here again, the ports are expected to be stressed as the trade shifts to a new trade lane and different set of ports, often with limited capacity and connectivity. Hence, it is important for national governments and port operators to review the performance of the ports, in particular container ports, due to the increasing containerized shipments arising from the proliferation of e-commerce and parcel shipments. So despite the centrality of the port to global value chains, one of the major challenges that we faced to stimulate improvement has been the lack of reliable, consistent, and comparable basis on which to compare operational performance across different ports. Modern ports collect data for performance purposes. The quality, consistency, and availability of those data, and the capacity and the willingness of the organizations to collect and share the data was not there. And this disallowed the development of a comparable measure to assess performance across the ports and time. In the market context, there is industry frustration with port congestion and delays and the resulting costs. While there was little improvement in the situation, there was no data sharing between the industry players. While it would be most important for our client countries and national governments to better understand the competitive value of efficient container ports. The market analytics firm IHS Markit analyzed the time a container ships are spending waiting for berths, reporting that it has more than doubled since 2019. They attributed the increased port delays to surging demand, equipment shortages, and other effects of the pandemic, saying that they believe these issues are persisting as the global trade recovery is becoming more sustained and broader. According to the IHS Markit port performance data, North America saw the biggest deterioration, with vessels spending an average of 33 hours at the anchorage during May 2021, compared to the average of just 8 hours the year before. While the ports of Long Beach and Los Angeles were most visible with their delays, the data indicates that container ships were experiencing increased waiting times globally. However, the introduction of new technologies, increased digitalization, and the willingness on the part of industry interests to work together collectively towards a system-wide improvements now provides the capacity and the opportunity to measure and compare container port performance in a robust and reliable manner for the first time. So let us talk first about the data that we used. The data used to compile the CPPI is from S&P's Global Port Performance Program. The program was started in 2009 with the goal of supporting efficiency improvements in container port operations and to support projects to optimize container port calls. The program includes 11 of the world's largest liner shipping companies that collectively operate close to about 80% of the global fleet capacity. This unique and highly comprehensive data set were captured for 164,000 port calls involving 257 million container moves at 826 container terminals around 444 ports worldwide. That was a data set that we analyzed. Out of the 444 ports where port call information was obtained, a total of 370 ports are included in our CPPI 2021. Ports with at least 20 valid port calls, where port hours can be calculated within a calendar year. Over this time period, 163,000 port calls were recorded in the data. The CPPI 2020 has been developed based on the overarching metric of port hours per ship call. And a port call can be broken down into 6 steps as illustrated in the chart. For every unplanned additional hour a ship spends in a port or at an anchorage, the ships will need to increase speed to maintain or catch up the schedule, resulting in increased fuel consumption, increased costs, and increased emissions. Because time is valuable for stakeholders, a logical step is to measure the port performance based upon the total amount of time ships are required to spend in the port. To account for significant differences in the ship calls determined by greater or lesser workloads at a port or smaller or larger capacity ships, we have analyzed the calls in 10 narrow call size groups and 5 ship size groups that generally reflect the types of ships deployed on the major trade lanes globally. The CPPI methodology includes 5 different ship size groups to account for larger ships using more fuel and to highlight through comparison the performance gaps, which in turn reveal opportunities to save fuel and reduce emissions. 43% of the calls in the database were made by ships with the capacity between 1,500 to 5,000 containers, or TEUs. And the database holds a sufficiently high quantity of data to produce a representative benchmarking in the smallest and the largest ship size bands. The CPPI 2021 has employed 2 different methodological approaches: an administrative or technical approach, a pragmatic methodology reflecting expert knowledge and judgment, and a statistical approach using factor analysis. The rationale for using 2 approaches was to try and ensure that the ranking of a container port performance reflects as closely as possible the actual port performance, while also being statistically robust. The 2 approaches are explained in our report that can be downloaded from the website. The ranking and score in the right-hand columns result from the use of the statistical approach, and the ranking and score in the left-hand columns result from the administrative approach. The index points used to construct the ranking in the administrative approach is an aggregate of the performance of the port, weighted relative to the average across all call size and vessel size. Accordingly, the score can be negative, where a port compares poorly to the average in one call size and vessel size categorically, particularly if it does not have an offsetting positive score. That is, the positive score is a shorter port stay. The report also provides a score for each port by call size and vessel size, and hence potential areas of focus for intervention by the respective port operator. The two top-ranked ports in the CPPI 2021 index was King Abdullah port in the first place. But right now, you have a new set of ports that are leading. The port of Salalah, which was ranked 6th and 9th in the statistical and administrative approaches, respectively, last year, is now in a different position. Of the top 10 ranked ports, all have improved their position since the last year, with Jeddah and the Qatar port of Hamad moving up 35 positions in the ranking, respectively. The exceptions are Yokohama, which was last year, which was in the top spot, which has fallen from first place in both the approaches compared to last year. There are 37 new entrants to the CPPI 2021 and a number of significant movers in terms of their ranking since last year. 149 ports improved their rankings last year compared to 2020, with some of the largest improvers increasing the ranking by over 200 positions. By contrast, the ranking of 182 ports fell in the CPPI 2021 over 2020, with some of the largest movers falling nearly 300 positions. For example, the port of LA and Long Beach. As per the CPPI 2022, Incheon Port is ranked 52 globally, with Busan ranked in the top 25 efficient ports in the world. Comparative analysis could be carried out to understand the areas where efficiency improvements need to be made. And we would be pleased to work together with the port authorities in this area. We hope that the review of the current port performance through deep analytical work of the port operation process and adopting relevant strategies based on the review of the measures adopted by the leading comparator ports would be helpful for the sustainable development of the port and maritime infrastructure development to enhance efficiency as well as reduce carbon emissions. The World Bank provides analytical and advisory services besides infrastructure project financing, and appreciate the collaborations with the Ministry of Oceans and Fisheries and the government agencies in Korea to enhance maritime logistics efficiently across the world. So we have outlined the next steps. Mainly, we would continue to produce this index on a yearly basis. So we hope to have more collaborations with the maritime nations, the port authorities around the world, to ensure that this index reflects the actual performance of the port, of the ports. And we promote the sharing of the data. We look forward to promoting the sharing of the data so that the countries can and the port authorities can learn from each other and take adequate steps to fine-tune the processes. Thank you very much.
Thank you very much for your great presentation. 네, 발표 잘 들었습니다. 고맙습니다.
Thank you very much for your presentation. We are now session 1, Marine Logistics. We have 2 more presenters. The next presenter is from HMM.
We'll invite Choi Young-soon, the head of Global Trade Management of the HMM, and The topic of the presentation is what would be the future challenges and tasks by looking at the current trend of the maritime logistics. Please welcome him with a round of applause. Thank you for the introduction. I am Choi Young-soon, head of the Global Trade Management of the HMM, and I'm from the business side, so I think I'll be able to provide some business perspective. And President Biden of the US called the maritime logistics a very important axis of the economy. So I think his remarks brought the attention of the world and made the world look at the important role of maritime logistics industry. And the previous presentations touched upon the future prospects, so I'd like to touch upon some challenges and tasks and how we should be prepared for any future scenario. So I'm going to touch upon some past and present and future elements, and I will use the COVID-19 situation to divide among the past, present, and the future, because COVID has become a game changer. And that's why we have to look at the challenges emanating from this game changer to come up with solutions, proper solutions for the future. So you all remember the Lehman Brothers incident in 2008, and all of us suffered from a panic attack because we saw a drop in the demands and drop in the throughput, and it was a start of the dark age again. And starting from the early 2000s, the shipping liners saw the importance of decreasing the cost, and they had to think about not only the side costs but also the fixed costs, the permanent costs. So the demand side made the problem permanent. So the large liners and small liners had to react in a different way. So we were seeing more and more gaps, and their approaches were not just about the cost or cost management, but also other aspects. So all of the situation drove the shipping liners into a long-term recession or slowdown. So there was a brief transition period in 2010, but starting from 2011, the shipping liners started to be in red for a long time, and there's a large gap between small and large shipping liners. And if you look at the past data, for only 2 years, they were able to secure earnings from 2009 to 2021. So all those 13 years, they were able to secure earnings for 2 years. So they had to be faced with the need for restructuring. So this is the current status of the 12 shipping liners, the EBIT earning, and you can see the recovery from 2020, but many of them are still below the baseline or the standard line. So there are gaps even among the large liners, but of course large companies were able to come up with some solutions on their own, but small size or mid-sized liners had other problems to deal with in terms of competitive edge. So you can see how an extreme M&A measures were tried, and in top 20 liners, among top 20 liners, 9 shipping liners disappeared through this extreme M&A measures. And as you can see, the Japanese went through this M&A and APL, and you can see how Hanjin shipping line of Korea went bankrupt through these M&A measures. So there are only 11 liners left, and Alliance is also restructured to be simpler. So Alliance is for setting the freight. Well, it's not just for freight, but it's not for cooperation, but it's for bigger productivity. So Alliance has nothing to do with commercial aspect. This is just for you to know. And we are a member of the TH Alliance. So the age of COVID began. After 2019 and through 2020, we had to cope with new situations that were brought about by the COVID situation. So problems started from ports, and especially in the west side. The problems were unimaginable. It was beyond our expectation. It was nothing like the previous disruptions in the past, and all the problems were long term, and it's almost permanent because it's been continuing for more than 1.5 years. So we're seeing a lot of port congestion, and since the ships stayed longer at port, and that led to the decrease in ship service, and in 2002, 17% of their service disappeared in 2021. Of course, it's different. The figures are different from region to region, but this freight space service in most regions disappeared, and this crisis had a spillover effect into Asia. So the situation is now almost global. So of course, many attempts were made. Trucks and many other areas. So these efforts a little bit helped to alleviate the situation, but we're still seeing the permanence or perpetuation of the problem, and especially in Europe, Antwerp, we're observing the bottleneck again, and exacerbated by the inflation. The tea time increased to almost 80 days from Korea to Europe. And it's not just a problem limited to Europe and the US. Canada, Brazil, and all the other regions are suffering from the similar types of bottleneck situation. And this is a change, social and economic changes. So it doesn't have any single source of or single cause of problem, and it's multifaceted, and its impact is multi-layered. So the consumption demands skyrocketed, port congestion increased, of course, and capacity decreased. So it can be interpreted as a leading cause, but I don't know, it can differ from person to person. So warehousing and all the other stages, if you look over the whole process, you can say the problem started from the warehouse or any single port. So it's not just a single cause. But at the end of the day, it's all about people or transporting people. So the shipfarers a lot of shipfarers were confirmed with the COVID virus. So they were lacking personnel, workforce. No matter how high level of automation we achieved, you certainly need some workforce to operate a certain part of the ship. And as was mentioned by Professor Kwon, 3 times, 2 times, I think sometimes you can see a difference of up to 5 times among the regions. So freight increase was one of the major causes of this situation. So fast forward to 2022. So COVID situation is easing and people are adapting, and we're seeing some fishy signs of global economy. And we're seeing the red lights and growth rate and inflation, interest rate increase and its repercussions. And some people are hastily talking about the recession of the global economy, but what I'm not sure whether this will be correct or not, because we are still waiting for many other elements to occur. No one can say anything for sure. And of course, we're seeing some positive changes, but we're also seeing challenges. The demand decreased, so we have to think from the perspective of supply chain in a wise manner. And another important factor is environment regulation. Starting from 2022, the shipping liners are not exempt from such environment regulation. And from 2023, the speed, emission amount, and the CCS and other carbon emission rights exchange. So all this will apply to our industry. So it's the environment regulation is not just an issue, it is a matter of life or death. And another determining factor is an American act, a new act. So U.S. is an important country, so the U.S. will try to amend the Shipping Act in terms of freight and the regulation of the facts, and I think it will have a huge impact on the global maritime industry and shipping industry. And there are so many other elements that I didn't mention or can't mention. So I think instead of just thinking about this problem, I think we have to take actions in a preemptive manner. And next, to the supply and demand prospect. We heard some long-term prospects for macroeconomic landscape, but I'd like to touch upon some local demands. So we're seeing the decrease in orders, especially in furnishing and electronics and durables. We saw the decrease of 30%, almost 30% in the order for such products. So we're seeing the increase of stock that will likely lead to the decrease in new order. And the consumption increase in product will have some impact on the service consumption. So I think we're likely to see the new patterns of service consumption. So for the throughput increase, I think we're likely to see the ups and downs in demands. And new orders increased. So we adopted 24,000 TEUs in 2021. So I think we took the initiative, and the increase in new orders was a good news, of course. The freight owners, but for shipping liners, it's a matter of life and death. So it's not just a good news for us. And so we're expecting extreme growth and supply and extreme changes in the supply and demand, while other factors being moderate. I think we have to adjust the forecast. And all of these items are already published. So I don't think this is up for debate because it's the matter of fact. So in the last year or 2 years ago, when the throughputs were uncertain and the situation was not really conducive to all of us, and we all understand how they had to increase the freight. But we have to learn from the past, and the freight owners moved in a creative manner to fight this situation. And the cargo owners had to move in a creative manner. They were forced to be creative. And we had to cooperate with the cargo owners to increase the service base. And in 2022, the throughput stability was the #1 priority issue. So they tend to go into a long-term contract to secure some stability. So that was the effort from the cargo owners' part. But the stock increase is a huge problem to all of us. And the retailers from the US and EU have to also think about this issue, the stock increase. So I think they have to come up with more creative solutions. I think the stock increase will mandate some changes in the Asian providers. And you can see how Amazon had to act in a preemptive manner. And as you can see, the Prime Day sales, they held 2 rounds of Prime Day sales. So this shows how the cargo owners are struggling in the sales sector. And they also have to think about decreasing the freight, decreasing the logistics cost. So basic issue for them, for the cargo owners, is the stock increase management and how to strengthen the cost management for the logistics. And environment regulation, as I mentioned, is not just an issue for shipping liners or not just for cargo owners. It's a problem of everyone's. And we at the HMM also holds a strict compliance standards for our subsidiaries, for our supply vendors. And the EV trucks will come out shortly, and we hear the words how Walmart's already purchased the EV trucks for their logistics. So cargo owners are busy keeping up with the current trends. And this is the perspective of the liners. And of course, different liners can have different approaches. But for Maersk, they also focus on customs and insurance and air transport, and they're already selling this to the freight owners. So Maersk has been committed to reshaping their identity as a total liners. And a lot of other companies are also expanding their identity, merging and acquiring the logistics companies. I think this trend is very strong among European liners. And Asian liners, including OME, has been a little bit conservative for the total service provider identity. So a long-term 3PL and last mileage will be a stronger keyword for many liners, and HMM is also taking this similar approach to this. So I think we will see the new trends in the future. No one can expect what is going to happen. And well, of course, liners are criticized as a polluter, large polluter. So that's why we have to be serious about complying with the environment regulation. And we need alternative fuels. But currently, we don't have any perfect alternative energy that can especially cover bunker side. But we all agree that we have to be thorough in trying to find alternative fuels, alternative energy, and LNG, the methanol, ships are big trends. And I think bunker has taken this down road, I guess, along with the trend for the green movement. But I think what's important is that this area, we can't accomplish anything alone. We have to cooperate with other energy-related companies. So like ammonia and bioenergy is all about getting or securing supply. And for other types of engines, we need to understand the technology because it's new technology. And starting from January 1st of next year, the IMO will start the new mandates with new environmental regulation. So this is something that we cannot avoid. This is something we have to deal with. And now, next I'd like to touch upon the direction of the HMM, considering the restraint of the time. So our strategy is for greener shipping, and we're aiming to achieve green shipping for over 1.2 million tonnage. So that is going to be the mid to long term. And of course, we'll increase the investment in logistics and green movement. And scrubber was a big issue 3 years ago. And I think the HMM took the initiative in installing the scrubber for desulfurization. And we're looking to 2050 for 100% desulfurized ships. And of course, we're cooperating with other agencies. And digitization is an important tool, is an important access too. So it's not just about sectoral, elemental change, but it's rather a structural change. So it's about process, productivity, and operational cost. And lastly, for structural competitive edge. So for all this target, we've been investing for more than 1.7 billion to achieve all this. And we are proud of this accomplishment. And we are aiming to be one of the global top tier liners. And we will put more investment in increasing the competitive edge of the HMM. and all the staff members and employees are committed to the same goal. Thank you for listening to my presentation. Thank you, Mr. Che, and we will invite you back for the Q&A session. Thank you. So his presentation touched upon conditions for the betterment of the shipping and logistics industry. And we will invite the last speaker of this session, Professor Chung In-kyo, who will talk to us about some implications of the global trade environment. Please welcome him with a round of applause. Thank you for the introduction. I am Professor Chung from Inha University, and I was supposed to be the first speaker of this session, but I had to came late because of my personal affairs at the university. So sorry for the change of order, and thank you for inviting me here. My thanks goes to the organizing committee of the forum and the moderator of this session, Professor Kwon. So the topic that I'm going to touch upon today is the environment, global trade, and the implications. So please understand that I will not wear my mask. It's not really easy for me to speak with the masks on. So the current global trade environment, you all know that it's changing. It is changing in a serious manner. Then from the perspective of the port service, port and logistics service, which is the large umbrella theme of this forum, how is it related? So I think mostly we see negative impacts. In May this year, I participated in the Davos Forum in Switzerland. I was one of the special delegates dispatched by the President of Korea. And the big topic was history at a turning point. So history is standing at a turning point. And the host organization of the Davos Forum also focused on this issue, but they were quite skeptical. I mean, is it really, is the world changing for the worse? Do we have to take this seriously? Because we're seeing regime change, but we are seeing the change of global order, and we're seeing Koreanization and digitization, which is the core of the technology change. Supply chain is also shifting. It's shifting from efficiency to stability. And Russian-Ukrainian war has been expanding this trend and intensifying this trend. So when you think of a word Cold War, well, if you're in your 40s or older, you know what this word means. But if you're younger than 40, you will only have distinct impression of this idea. So if the past Cold War is about space war and military war, today's Cold War is about industry, and it's all about blocking. It's all about turning this world into several blocks. It's about taking sides. So the U.S. is engaging itself into a new Cold War. And many people are so used to the past peaceful trade environment. So they won't accept the changes they're looking at, that we are entering, or we are about to enter, a new Cold War. or the fact that the US is starting its new containment policy. And the US is leading other countries to do the same. So these days, today, the US is all about export control, sanctions. So already, the US has been trying to contain China in terms of technology, export and trade, workforce. So the US is good at this. So COCOM was the export control for the communist countries. So back then, the US was able to develop many export sanctions and control measures. And they are using this. And they're also turning these sanctions into something that their allies have to comply with too. It's tacit regulation, so to speak. So the US and other allies, Western allies, versus China, Russia, and other socialist countries. And of course, no one can know for sure whether this will be completed in 10 years, the complete A versus B, or will that develop into something more related to technological war? But what we can say for sure right now is that the aspect of battles is changing. And as the three factories, the global three factories are running. And this movement has been defining the growth trend of the world. But currently, because of the decoupling policy, Factory Asia is collapsing, so to speak. So the supply chain restructuring is not just because of the COVID situation, but it's also induced by the US policy change. So there are economic factors, social factors, or natural factors that impact the supply chain. So tsunami is a natural element that impacts the supply chain. So everybody knows how this can hit the supply chain hard, the natural disasters. But could we ever have imagined this economic policy change or social policy change will have this strong impact on the supply chain? So if it's political policy, if it's a political trend, it is bound to have a longer term impact on the supply chain. So the new Cold War that I mentioned is already having some longer term impact on the global trade environment, but this is exacerbated by the Ukrainian war, added by the intensifying inflation. And this will be exacerbated also by other factors, including Russian strategies and policies to disrupt energy supply, of course. So for the last 30 to 40 years, we are so used to low inflation and stable economy that can be characterized by Goldilocks age. We are so used to Goldilocks economy, And of course, there are local wars and local battles, but we had not seen this size of war. And this is something that happened for the first time in 30 to 40 years that disrupted all those prosperity we enjoyed for the last 30 to 40 years. Everything is changing. So I think we can expect we will see events will happen that are completely contrary to what we used to see in the last 40 years. So I told you our history is at a turning point, which was the topic of the Davos Forum. And I think that is true, especially for food and energy disruption, which is expected to continue until the end of this year. And I don't think much will change the next year and the year after. Sri Lanka went bankrupt, so to speak. It collapsed, and other South American countries are about to see the economic crisis, and I think it will have a huge spillover effect throughout all the economies in the world. So mostly we're only seeing negative elements, some elements that will act negatively on the world trade. And there are many choke points in maritime logistics. So this choke point can block or congest the whole process, whole chain of logistics. A single choke point can do that. So in the past, the US or European leaders were able to somehow manage to contain the situation, but now it's almost impossible for them to do that. So Forbes magazine in 2020 summarized the elements that negatively impact the throughput and logistics, and you can see these 4 points on the slide. So the Republic of Korea and Incheon Port going forward is going to be impacted by the changes in the logistics and trade, especially from the perspective of trade with China, because we're about to see the decrease or shrinkage in the Chinese trade. And if you look at Bloomberg's and other economic magazines, you can see how they're predicting the Chinese economy is also on the verge of slowing down. And the US policy of decoupling, especially against China, is aimed at inhibiting the growth of the Chinese economy. So there are many scenarios to think of, but high growth scenario is not likely. Maybe low growth scenario is most likely. So from the perspective of Korea, a supply chain and logistics service, port service, all these elements included, the economic stability is the most important issue. And depending on the restructuring level of the throughput and logistics network, I think future approaches will be determined in terms of the direction. So the growth rate is not going to be something that we used to see. And China is pursuing the double circling policy. So I think, of course, we can say we have to focus on China, even though we have to risk decreasing the trade with the US. But basically, that is not a prime scenario. And I think Incheon also has to adjust its policy accordingly. And China is also talking about free economic zone, which is completely in line with their policy, new policy. And this free economic zone is mostly to contribute to its domestic economy. It's not designed to contribute to the global trade or global economy. I think that is something that we have to remember. Thank you very much for the presentation. And he was the last presenter of the session 1. So far we've listened to 5 experts. So we're seeing more and more uncertainty in the global trade environment. And we have been talking about some global issues.
So we listened to 5 presentations so far. And the moderator for this session earlier explained well about this session. We had presenters joining online and through the screen, but thank you to all of you. And from now on, we will have a panel discussion all together. We looked into the Global Trade Monitor in what will determine global trade in the forthcoming months. And I hope that we can come up with some good ideas on policies or government directions. So we will invite the moderator and the panelists onto the stage. Professor Kwon Pyong-oh, as well as all presenters, please be seated. So I will now hand the mic over to the moderator. I'm back. I'm Kwon Pyong-oh. We ran about 10 minutes late. We started about 10 minutes late, and we're running a bit late. And we have the next session to begin at 3:30. But to set things up a little bit, we have to finish by 10 after 3. So we'll have to hurry up a little bit. So today I have Professor Chung In-kyo and Mr. Choi Young-sun and Ninan Biju-umen, as well as Jakub Mikhail Kwiatkowski. He's with us, joining us online. And to save time, I will ask a few core questions to the panels. And I kindly ask the panels to give a brief answer to the questions. So, first, one of the hottest global issues is the possibility of a recession in the US economy. And I think many of the participants are wondering about this as well. So this question goes to Professor Green, who we met on the screen. So this year, in response to inflation, the US Fed is drastically raising benchmark interest rates, resulting in a growing concern over the possibility of a depression in the US economy. And the USA is the world's largest economy, and if the US economy goes into a slump, the global economy and trade will also slow down, leading to a negative impact to the marine logistics industry. So, regarding this discussion on the possibility of a economic depression in the US, what do you think about this, Professor Green?
Let me start by acknowledging what our moderator has said, that there is a lot of anxiety about the possibility of recession in the United States at the moment. And we know that what happens in the United States doesn't stay in the United States, that a significant economic slowdown or recession in the US will spill over into slowdown in much of the rest of the world. It's really only China, as I said in my presentation, that appears to be moving in the direction of accelerating growth at the moment. So the question of the day becomes, how serious is that recession risk? In the US, all eyes are on inflation and on the Fed. Again, as I emphasized in my presentation, if inflation remains a chronic, protracted problem, if it remains in the range of 8 or 9%, as it is at the moment, or as it has been recently, then the Fed is going to have to keep raising rates. And if it keeps raising rates, keeps moving up that staircase, I think that will crunch the economy and we will then have a recession. On the other hand, if inflation begins to come down on its own, if it comes down toward 5%, 5 or 6%, without the Fed having to do much of anything, then the Fed can pause toward the end of this year. It doesn't have to keep raising rates. That will not have as pronounced a negative impact on the housing market, on business investment, on retail sales. And I think the economy, US and world economies, will be able to skate through without a serious recession. The latest numbers for the United States do suggest that inflation is moderating at least a little bit. Gasoline prices have come down. Housing prices have come down. Most financial market indicators suggest that inflation expectations are moderating starting in 2023, starting for 2023 as well. So that is a modestly optimistic, a modestly positive sign. With inflation perhaps coming down a little bit, the Fed is more likely to be able to pause, and we are more likely in the US to escape a recession, result being a more positive scenario for the global shipping industry. So I would say keep your eye on the inflation numbers for the United States and hope for the best.
네, 교수님 감사합니다.
Thank you very much, Professor. We couldn't listen to him directly due to time restraints, time differences, but thank you for your answer.
My next question. Another important variability that impacts the global trade is the globalization of business, and it was mentioned several times. So my question is directed to Dr. Kwiatkowski. So the globalization of the businesses or companies is one important factor that contributes to the increase of the global trade. But we now see the retreat of the globalization, and we can see how global value chain is being restructured. And I think it'll have a huge impact on the maritime logistics. So what is your position for deglobalization or the trend of global value chain restructuring? And I'd like to also ask you, how can such changes impact the trade of Korea with over 60% of intermediate goods export?
Thank you very much for this question. During my presentation, I mentioned basically 3 scenarios for the future of globalization, which is further globalization, deglobalization, and reorientation towards strengthening regional cooperation. In my personal opinion, the most probable is the last one, trade regionalization. In this case, seeking for the lowest labor cost will be replaced with some optimum, with some trade-off between labor costs and geographical proximity. In such a case, from South Korean perspective, in my opinion, it won't be a fundamental challenge. Like the largest trade partners of Korea are, to a large extent, regional partners. Mainland China, Vietnam, Hong Kong, Japan, Taiwan. The largest one not being regional is the US, which is the world's largest importer, for which South Korea is 7th largest partner in terms of imports. Trade with just these 6 countries I mentioned is already over 60% of total South Korean trade in 2021. On the other hand, even if we assume the large-scale deglobalization, if we assume that it will happen, we should keep in mind that the deglobalization does not mean autarky. The rules of division of labor will still hold. The countries with the lowest labor costs globally may be to some extent replaced in the regionalized value chains by countries with relatively cheap labor, but it will not mean that the reshoring will be total, will be full, and it will not mean breaking international cooperation. It's rather just picking the best performers. From this point of view, the globalization is a threat rather for many least developed countries, which struggled over the last decades to join the global value chains, many African economies, for example. So deglobalization may exclude those countries from global value chains again, causing another wave of marginalization and impoverishment. And that is something that we should carefully monitor at the global level. Thank you.
박사님 감사합니다.
Thank you very much, Doctor. My next question is directed to Professor Chung In-kyo. So you said Incheon Port is concentrated, 60% of its trade is concentrated in China. So it's largely susceptible to the trade issue, especially related to China. So many reasons were mentioned. How since 1992, with opening our diplomatic relation with China, I think we're at a point where we have to rethink the relation with China, especially in terms of trade. What do you think? Yes, thank you for the question. I think we're already in it. I think we're already, we started the rethinking of our relation with China. We're in a new direction. But of course, it doesn't mean a total change from the scratch. So I think many businesses will be faced with difficulties because they're seeing mixed situations. But from a longer perspective, I think if certain items or certain products are preferred by Chinese, then China has no other choice but to depend on Korean export, right? So, but despite that, despite such fundamental, I think the Korean policymakers and including politicians have to be really, really careful not to wage war, unnecessary war of words with China. We have to be careful because it has a huge impact. Small change in policy can have a huge impact on the business transactions and business relations with China. And so politicians and policymakers cannot make the businessman into a sacrifice. They have to be careful. And of course, business themselves have to look for other ways. They have to advance into other markets. China is not the only option for them. But it's not wise for politicians and policymakers to wage unnecessary war of words with China. Yes, thank you for the insight. I think politicians have to heed your advice. And to the next question. Next question is directed to Mr. Che from the HMM. So I enjoyed your presentation. And you said the companies have to deal with the demand shrinkage and stronger environmental regulation and the American law, American Act related to the maritime innovation. And you also introduced some of the responses of your company. So, based on your experience in the pre-COVID situation, what should be the direction? What should be the most important thing that government and businesses have to pay attention to? Thank you for the question. Well, I don't know. I'm not in the right position to talk about some policies of the government because I'm a businessman. But I think what we have to remember is that maritime industry, well, all the industries are not just industry, they're a part of national economy. They're important axis of national economy. So this is something that the government has to remember in coming with any policy. So it's not just about increasing the export, short-term exports, but it's also about having a long-term policies and support. And it includes indirect support. For example, environmental regulation is something that a single company is not something that single company can deal with. It needs a structural support, systemic support from the government. For example, subsidies for greener ships, smarter ship, and also the cooperation with relevant agencies and industries. So combining efforts from multiple industries is important, and I think it has to be led by the government side. And lastly, our business focuses on the US and Europe. But I think the investment in opening paths for other markets is also needed. So I think the government has to play a certain role in developing new markets. Thank you.
The last question goes to Mr. Ullman. Due to COVID-19, disruptions in the global supply chain are ongoing, and the cargo volume and other recent business conditions are emerging. And what are some wise responses to such changes? Could you give an opinion on that?
Thank you. First and foremost, World Bank advises developing nations to build back better and come out of the COVID in the days ahead. So what we are encouraging the governments is to use the data analytics, use the data, digitalize, capture as much information as possible, and learn from the way some of these developed countries have made progress. So sharing of best practices and the strategies that similar comparator countries have adopted. So using the data and improving your efficiencies in the system, that's first and foremost. And as was mentioned, a collaboration, it's a collaboration between the government and the private sector is very important. Especially, for example, Korean government can lead not just support infrastructure, but lead trade as your previous job as a trade facilitation expertise. So in the new emerging world, you need new trade linkages. You have to diversify both your exports as well as your imports. And that starts with the government initiating the trade and the private sector following it up from there. Thank you.
네, 감사합니다.
Thank you very much. I mentioned earlier, but now it's actually time for Q&A session, but we do not have enough time and we now need to prepare for the next session, so we will not be able to have the Q&A session. if you have any questions, please give your question to the secretariat so that we can give you an answer. And I'm supposed to have a 5-minute wrap-up time for this session, but I will pass on everything, and I just want to make a few remarks. Who dominates the ocean dominates the world. This was a word by Alfred Mohammed. In fact, it was a very small country, the Netherlands, but it actually dominated the world in the 17th century, and that was possible because it ruled the ocean. So in terms of the global supply chain, the ocean industry is more and more important. And in this occasion, I hope that not only in logistics, but also in the ocean logistics, I hope we can take a leap forward, and the government as well as businesses can cooperate and collaborate. So I look forward to the cooperation. So we will wrap up the session here. Thank you very much to all the participants and the panelists who have been joining us throughout the session. Thank you very much. Thank you. We didn't have much time, but I think it was a very intense session. Thank you very much, Professor Kwon Pyong-oh, for moderating this session. And I think the presentations were very high quality. Thank you to the presenters as well. The importance of ocean logistics, we talked about that throughout the session. And in order to take a leap forward as a country, Korea, we also shared some ideas. So we will wrap up the first session, and session 2, the ocean energy session, will begin at 3:30. We will have a short break, and I'll meet you back in the second session. Thank you very much.